Hi everyone, let's check my bullish and bearish high time frame, medium time frame and low time frame Elliott Wave scenarios on Bitcoin, starting with the high time frame bullish scenario where we're looking for an extended wave 1, then we have a 2, 3, sideways 4 and then eventually a wave 5 to the upside, where the most common target area for a wave 4 if wave 1 is extended is between the 0.236 and the 0.382. However, the reason why I'm showing a high time frame scenario in a morning update is because of the invalidation at 25.3k, because in this impulsive structure the price action of wave 1 is not allowed to overlap with the price action of wave 4, and if this wick of wave 4 is going to be taken, price moving to the downside, I do think it might be quite likely price is going to reach the yellow target box. But as you can see, the yellow target box is below the invalidation level in this particular scenario. Now, yes, price might be able to move into the price action of a wave 1 if we're talking about a diagonal, but that is not the case on the higher time frame. So you can find more information in my macro and high time frame video, which is in my end screen at the end of this video. So preferably we're not taking this wick, and price in this particular scenario is moving towards the upside. Now this is something to keep in mind when I'm going to talk about the low time frame scenarios. The alternative bullish scenario is that this is a 1-2-1-2, so where wave 2 can go a little bit deeper for more downside before a bigger 3 to the upside. But again, for more scenarios and information, check my macro and high time frame video, because we're going to jump in the lower time frame. So on the medium time frame, in the bearish scenario, which means we are going to take this low, once again, keep the high time frame information in mind. We're going to take this low. We're looking at a WX and then an ABC in wave Y, which is a zigzag. So the most common target area for wave Y is between the 1 and the 1.236, which is between 25.8k and 24.8k, and the 1-to-1 line here in the middle is the target for wave C, in this then being an ABC. Now in order to get the 1-to-1 inside the bigger target box for a wave Y, this wave B has to retrace pretty high, because I now pulled this 1-to-1 over here from the high of X to the low of A to then the 786 over here. And why the 786? Because we have a target box around this area. And the target box around the 786 is between 28.9k and 29.2k. So that is an interesting area. So if price is moving all the way up here, it might still get the opportunity to move to the downside. That's also what I'm saying basically. And if we open the range for a second, let's have a look. That is also the area where you have the value area high of this range. Now I'll go in more detail in a little bit in this range, but there is also the value area high. So that's actually quite interesting for then potentially still a move to the downside. Is it preferred? Well, not necessarily if we look at the high time frame scenario, but it is a scenario we need to keep in mind. Now, another thing that I think is important to at least mention is that there were no bullish divergences on the CVD if we look at this structure over here. But now on the local time frames, which I'll show in the lower time frames as well, once we go there, we do have some bullish divergences. So we'll go into more detail. The only thing is we didn't bounce here on one of my target boxes, and I do like my target boxes. We did have support over here. We identified support for the bounce, and of course we had the Elliott Wave tradable scenario over here, educational, no financial advice. So that's all nice, all good, but this is at least something to also keep in mind. If we then look at the very bearish scenario, which is then more like the high time frame bearish scenario stuff, which I haven't shown in this video, but we're looking there for a 1-2, another 1-2 before a 3 to the downside, where the volume in this particular wave 3 has to increase massively, while 3 is going to the downside, as it is the biggest and longest move usually in a bigger impulse. In this particular scenario, the most common targets for a wave 2 are between the 0.5 and the 0.786, which is between 27.8k and 28.9k. Also the golden pocket quite nicely connected with the highs over here for a potential bit of a liquidity grab and a move to the downside. So we have to wait and see how price is going to reach these areas, because actually the area between the golden pocket and the 786 is quite important for the bullish or the bearish scenario. If we then do go to the bullish scenario, where the wick is the end of a move, we're looking at a zigzag and then an ABC, where this is a nice 5-wave structure hitting the target area for a wave C, most commonly between the 1 and the 1.236. Very nice for then, of course, the entry that we had at the 1-to-1, as the stop loss was below here, as that is the 1.618 rare target for a wave C, so you don't expect wave C to go all the way down here. And now that price has moved to the upside, stop loss should be break even, at least no financial advice, but from an Elliott Wave point of view, this makes sense. also with the bearish scenarios, of course, and then it's about riding the waves to the upside, right? So we're going to wait and see how this is going to move. Wave C is a little bit shorter in time compared to wave A, as can be seen with the fib times over here, taken from the high of A to the low of A to the high of B. It's about 61% of the length in time compared to A, but that is absolutely fine for a wave C. If we then move to the range, which I've shown in a second, then what can we see? Well, it's interesting, right? We were talking about the range and sometimes the excursions basically outside of the range, and that once price is going to move back in the range, I always like to see a bit of a back test, and then there might be a possibility to move to the other side of the range, which would fit the potential bullish, but also, of course, the bearish value area high scenario. But in this scenario, let's look at what happened. So price moved outside the range, then eventually it found resistance over here, right? Then eventually we moved in the range, moved to the downside, and now we backtested the value area low of this range. Now the safe setup is to wait for the high to be taken for a potential entry. Usually, if one says trade the range until it breaks, right? Trade the range until it breaks. Of course, one can just enter at the value area low, stop loss safely below, and then eventually trading it to the upside. Another way of trading is to wait for this, and once price moves up, entry over here, stop loss below here, and then take profit one, or at least maybe a small little TP at the point of control, possibly stop loss break even, looking for more upside. Value area high is next, and if the value area high is taken, there's a triple top here at the highs at about 30k, which is incredibly interesting for price to move towards. So that is definitely an area of interest for me. If price is going to move to the value area high, it might be quite likely we're going to take these highs as well, but we have to wait and see how price, of course, is going to develop. But yeah, what we see right now is actually a very perfect backtest of the value area low, and we have to see how price, of course, is going to evolve. Of course, you know, all the trading scenarios, they are educational, not advice. Make sure you have your plan, your strategy, your entry requirements, and you trade like a disciplined, sensible trader. If we then move to the two low time frame scenarios that I have, the first one I want to show you is the bearish scenario. So actually, let's go to the 30 minutes, where we are talking about a finished structure over here and then an impulsive structure to the downside. So then this is a three wave in a wave W, which is an expanding flat, followed by a wave X, and then eventually a three wave in a wave Y, where wave Y ended in the most common target area for a wave Y, which is pulled, little note, from the beginning of W, so not the low, because this is a wave B in an A, B, C, from the beginning of W to the high of W to the low of X. So that's how you then get to this target area over here, for then potentially a move to the downside. In this particular scenario, this move down is then a wave 1, followed by a corrective wave 2, where the daily naked point of control and the golden pocket line up perfectly at 27.4k. So this is a very important area for this particular scenario, after which one then expects a continuation to the downside in an impulsive structure where volume should then increase. Now this then goes against, of course, the high time frame scenario that I've shown you, where we're looking for upside, but we also always need a bullish and bearish scenario. And on the high time frame I also have bearish scenarios, but I would prefer the bullish one, to be honest. But yeah, so we have to wait and see how price is going to react at this area. Now, if price is continuing to push to the upside, we still have the invalidation over here at 27.7k. So if price moves up through this area, then this is not a 1-2 and then eventually an impulsive down to the downside anymore. The CVD I mentioned, I'm going to show you the CVD on the lower time frames. Let's go to the 15-minute in this scenario. So basically what happened is, throughout the move to the upside, we didn't see any bullish CVDs. We actually saw some bearish CVDs in this range over here, which played out. But then more locally over here, we start to see some bullish divergences. So price moved to the downside. We had this bounce, which looks to be like a three-wave structure over here, right? Like a nice three-wave move in a zigzag, ABC, very nice. Then eventually price moved to the downside, and the blue line moved to the downside as well. So the blue line that you see over here, a CVD line, price making a higher low, but the CVD in blue making a lower low. Very interesting bullish divergence between this low over here and the higher low that has been created. And that is very interesting because the target for that bullish divergence is this high over here. So we have a bullish divergence between this low and these lows. And the target for a bullish divergence is taking this high at 27.3k. So the moment this high is taken, the divergences are back to neutral. They're neutralized, right? So that is also what I think would be nice, because if this is a 3-wave move, and this is another 3-wave move, we can have another 3-wave move to the upside, and then a corrective pattern for then potentially this wave 2 and a bigger move to the downside in then a wave 3. However, also for the bullish scenario, that is an interesting scenario very locally. So over here, where now we're looking for upside. And you can see I might, for the ones that have been watching my previous video, I changed things up a little bit. So in this scenario, I had a potential 1, 2, 1, 2, and then a bigger 3 to the upside. However, I didn't like the fact that this wave 2 retraced to the 0.236 taken from the low to the high of 1, because in a 1, 2, 1, 2 scenario, it is very, very rare for a wave 2 to retrace to the 0.236. However, if wave 1 is extended, the most common target, retracement target for a wave 2, is between the 0.236 and the 0.382, which is absolutely perfect in this particular scenario. So then wave 2 retraced inside this target box, as you can see. Then eventually we have a wave 3 to the upside, a wave 4, and then this is then a wave 5, where the common target area for wave 5 is between the 0.618 and the 0.786, pulled with a trend-based fib extension from the low of 1 to the high of 1 to then the low of wave 2. And as you can see, the high of wave 5 and then wave 1 ends nicely inside that area as well. So that is actually quite interesting. Okay, so then this is a wave 1. So then we can be looking at a potential wave 2 in an ABC structure, which is then an impulse, a 3-wave move where the daily naked point of control is again very interesting, for then eventually another 5-wave move to the downside. And if this is a wave A followed by a 3-wave in a wave B to the daily naked point of control, and then a wave C to the downside, the most common target area for wave C, and therefore the potential end of wave 2, and this being an ABC and the end of wave 2, is between the 1 and the 1.236, which then is between 26.6k and 26.4k, which is in confluence with one of the most common targets, retracement targets for wave 2, being the golden pocket, and also just above the daily naked point of control, which can be very nice because price can wick into that daily naked point of control and then eventually continue moving to the upside. So I do think this is very interesting. Now, of course, this scenario to the downside is invalidated the moment price is going to take this high over there. So the moment that high is taken, we are no longer talking about an ABC to the downside, but I do think it is important that this scenario is spoken about, where at least if we do move to the downside, it's not necessarily bearish. Of course, if we take this low, this whole scenario is invalidated, but if we continue moving to the downside like this and actually take this low as well, there's a little bit of an order block over here on the 30-minute, we can still be in a very nice bullish scenario. So yeah, I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested for all the other scenarios. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.